Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Wednesday, September 28th, 2022. By the way, before I jump into the charts, please click like each and every time you watch one of these videos. It really helps us out a great deal. Share it with your friends. You can click share as well below the screen. Also, if you haven't subscribed yet to the Wicked Stocks YouTube channel, please do so. Anyway, let's jump to the charts. Take a look at the bigger picture here. 3 trading days ago, which would have been Friday of last week, we opened and closed, of course, below the channel structure that is presently at 287.65. And holding below this formation, a level that can contain weekly buying pressures, will keep and should yield the low to mid 260s, possibly this week yet. I'd say by the end of next week at the latest. And that is... let me see here. What's a good representation? This is a good representation right here. So holding below 287.65, you can see how it wouldn't take much if over the next 2 to 3 days, 3 to 5 days, we continue south into that 261.18 to 261.81 to 265.19 area. On the way down today, I've got minor points, all carefully chosen, well suited for aggressive day traders, but 277.32 stands out as our downward pivot point for the day. And if we do break or open below 277.32, we just might, by the closing bell, continue south into the mid 260s. That would be a high volatility day, no doubt, but we've had a number of those over the last week or so. And if we do test 265.19, it is really the beginning of a range down to 261.81. 261.81 is a rising 2/3 speed line that can contain selling through October. And once tested, we can continue to stabilize as we have actually for the last couple of days and turn higher to 332.61 within possibly 3 to 5 weeks of testing the 261.81 to 265.19 area. If we were to close below 261.81, it sets off a significant sell signal that should play out into later year. Under that scenario, I'm going to show this chart here. This is a weekly chart, actually. So closing below that speed line at 261.81 would indicate, I think, it would break the May low of 206.85. That would take a month or two to realize. And over the next 2 to 3 months, the 189.88 descending channel bottom in reach, following a settlement below 261.81, the 189.88 formation able to contain selling by that point in time through the first quarter of next year. This formation performed pretty well in May when we tested it, and we had a Tesla video out at the time for our premium subscribers that showed this as a good area that could contain quarterly selling pressures when tested, and it did. And so that's kind of it for the downside. Let's talk upside today. That if we do happen to push or open above 287.65, 292.06 is likely, then it can contain intraday buying, and beyond which 297.19 is in reach by the closing bell. So just know that if we push, especially if we open today above 287.65, we may well reach 297.19 by the closing bell, and that is well represented here. Nothing more than an upside 5/8 Fibonacci from the high about a week ago against the low on Monday. And so 5/8 back up, 297.19. If we push, especially if we open today above 287.65, this 297.19 in reach where we can place a daily high. But overall, closing back above 287.65 would neutralize that meaningful sell signal down into the low to mid 260s. And with that rejection, I would anticipate continued recovery through the rest of the week under the scenario of closing back above, where are you? Here it is. Back above 287.65. If we settle above it, I think by the end of next week, we should continue up into that 310.67, that longer-term 50% upside retracement that's performed quite well over the last couple of months and containing buying pressures to the 315.43, mostly horizontal but slightly ascending channel top. So closing above 287.65, we should, by the end of next week, push into the 310s, 310.67 to 315.43, where we could actually put out another weekly high. But if we close above 3 315.43, you can see we're probably just 3 to 5 days away from reaching that much more meaningful 332.61 level. 332.61 is well represented here, where we could top out through the fourth quarter and into Q1 of next. But we're nowhere near that. We remain heavy for the week below 287.65. I'm going to leave you with this image here. This really says it all. Holding below 287.65, still anticipating the 261.81 to 265.19 area by the end of next week or sooner, where we can bottom out through October trade, and once tested, we can stabilize and turn higher over that time horizon. I think that pretty much summarizes it. Please click like every time you watch it, and subscribe if you haven't. And we'll be back tomorrow with another Daily TSLA report. You have a good day.